Hi, I'm Mark, and today on the Outside Views morning video, I want to talk about more Brexit consequences. Because after Brexit, the European Union wants to bring the euro clearing back from London to the Eurozone. Banks are now warning the EU plans could undermine financial stability. Of course they do. Despite Brexit, most of the derivatives denominated in euros are still settled in London. The European Union has been resisting this for some time now, and their declared goal is to reduce dependence on the British financial centre. Although the EU is keen to bring the derivatives clearing business back to the continent, Britain's LCH group continues to clearly dominate the euro clearing market for the time being. Clearing is the only area where the EU has granted London temporary equivalence post-Brexit, allowing the platform formerly known as the London Clearing House to continue clearing euro-denominated swaps. According to market research firm Claris, in 2022, LCH processed 50.9 trillion in euro swaps, and this corresponds to a market share of around 94%. In comparison, Eurex Clearing, Europe's largest clearing house for interest rate derivatives, only cleared 3.35 trillion euros. LCH is part of the London Stock Exchange Group, and Eurex is operated by Deutsche Börse. Brussels is urging financial firms to make more use of Eurozone clearing houses for their derivatives and the deals after June 2025. In the tug of war over euro clearing, the financial centers are competing for market share and jobs. However, European derivatives houses are now increasing the pressure on the EU to reconsider its plans for clearing euro derivatives in the city. Among other things, they warn of a major risk to financial stability. Europe's largest derivatives houses, including BNP Paribas, Deutsche Bank, and Société Générale, vehemently reject the EU plans, as reported by the Financial Times. The London clearing house LCH, which is threatened with losing lucrative business, is of course also pushing for a rethink. The institutes fear additional costs and less efficient clearing. Banks and their lobby groups also warn that Brussels' proposals to relocate clearing activities could harm European markets. According to the industry group International Swaps and Derivatives Associations, the ISDA, the proposals are not workable in their current form and could increase market risk. The lobby group European Banking Federation has also circulated a position paper in recent weeks. It warns that the current plans could have unforeseen and largely negative impacts on the competitiveness, resilience, and attractiveness of Europe's financial markets and their financial institutions. Euro clearing refers to the process of settling and clearing financial transactions denominated in euros. It involves the facilitation of payments and the transfer of funds between parties involved in euro-denominated transactions, such as banks, financial institutions, and corporations. Clearing involves verifying the details of a transaction, ensuring that the buyer has sufficient funds, and confirming the transfer of ownership or settlement of the trade. It also includes netting, which involves consolidating multiple transactions into a single amount to reduce the number of payments and streamline the process. Euro clearing is typically conducted through central counterparties, so-called CCPs, or clearing houses, which act as intermediaries between buyers and sellers. These entities assume the counterparty risk, guaranteeing the completion of the transaction, even if one of the parties defaults. The most prominent euro clearing house is Euroclear in the EU, which operates the Euroclear Bank and Euroclear Securities Settlement System. Euroclear provides services for the settlement of securities transactions, collateral management, and the clearing of over-the-counter derivatives, so-called OTCs. Efficient euro clearing systems are essential for ensuring smooth and secure financial transactions within the Eurozone. They contribute to the stability and integrity of the euro as a currency and support the functioning of financial markets by reducing counterparty risks and providing a reliable infrastructure for settlement and clearing activities. Brexit, that means the withdrawal of the United Kingdom from the European Union, has had consequences for euro clearing activities, of course. Prior to Brexit, London was a major hub for euro clearing, officially, and it still is unofficially, with a significant portion of euro-denominated transactions being cleared through UK-based entities, primarily the LCH. But the consequences of Brexit on euro clearing are many. As a result of Brexit, UK-based clearinghouses lost their automatic EU passport rights, which allowed them to provide clearing services to EU member states. This led to concerns about the continuity and accessibility of euro clearing services from the UK. To maintain access to euro clearing, the EU introduced a new regulatory framework known as the EU Central Counterparties Recovery and Resolution Regulation. This regulation grants EU authorities the power to require systemically important euro clearing activities to be conducted within the EU. As a result, some clearing activities previously performed in London have been relocated to EU member states already, particularly to financial centers such as Frankfurt and Paris. The relocation of euro clearing activities from the UK to the EU has resulted in a degree of fragmentation. Euro-denominated transactions that were previously concentrated in London are now being cleared in multiple locations across the EU. This fragmentation can lead to increased costs, reduced efficiency, and potentially less liquidity in the euro clearing market. The loss of euro clearing activities has also had an impact on London's financial industry. The City of London, as a global financial hub, has experienced a reduction in its role as a central hub for euro clearing. This loss may affect London's competitiveness and could result in the migration of some financial services and, of course, related job opportunities to other EU financial centers. The fragmentation of euro clearing activities and the need to establish new arrangements between the UK and the EU have introduced increased complexity and costs for market participants. Financial institutions may need to establish new relationships with EU-based clearinghouses or utilize additional intermediaries to ensure continuity in euro clearing services. Overall, the consequences of Brexit on euro clearing have resulted in a redistribution of clearing activities from London to EU member states, increased fragmentation in the EU clearing market, and potential challenges for market participants in terms of complexity and costs. But Brexit has tons of more consequences. I talked about this in another video already, that the automaker Stellantis warned, and they are the worldwide number 4 under the car makers, that they will close their factories in the UK if the treaty between the EU and the UK after Brexit will not be renegotiated. Just 2 years ago, this concern said that they will work in their factories close to Liverpool and London to produce e-cars. They were for the domestic market and the export to the EU, but from next year on there will be a tariff of 10%. And with that, Stellantis wouldn't be able to sell those in the EU anymore. And the reason is a clause in the treaty where tariff-free products have to be 45% made in Britain for this. And Stellantis cannot keep this promise. And to this company, Peugeot, Citroën, Fiat, Chrysler, and Vauxhall belong to them. That's the British version of Opel. And they want to extend this to 2027. Otherwise, they wouldn't invest anymore and bring their production capacities to an EU country. Because the biggest problem are the batteries. The United States will have a lot of help for their companies, and now the EU wants to do the same. And even Macron talked about Elon Musk recently about this, because they want to buy a gigafactory in France now. And the Brits are far behind on that regard. But I talked about another video about British Volt in January. they were a kind of a beacon of hope for the industry in Britain. But in February, they were bought by the Australian recharge industries. They still want to buy, they want to build the factory, but they don't want to do batteries for cars. They want to do batteries for just saving energy from green energy, for example. And at the moment, there are 800,000 jobs at stake if Stellantis would leave the UK and stop producing there. So Brexit is a big mess for the UK, and I can only say this in every video again and again. But to come back to the video beginning with the banks, of course, even German and French banks are saying this, that they want to keep it in London because there are more and more less regulations on the financial market in London than it is in the EU, with much more risk, but they can do a lot more they can't do in the EU because it's just irresponsible to do that, but they can do it now. And that's why they want to prevent that the euro clearing will completely have to go to the EU. But they left the EU, and they didn't have much to do with the Eurozone before, as they had the pound and not the euro, but still they were a member of the EU. And in the car industry, as I mentioned in the other half of the video, it's not only Stellantis in this problem, it's also Tata. They are building the Land Rover, for example. They are under the same pressure. And now they even have the problem with the EU regulations. They promised the big bonfire of EU regulations and wanted to end 4,000 EU regulations this year, and that doesn't happen either. So the government is not finding a way to make this Brexit work. It's only 600 EU laws that will end now, and another 3,400 will just continue. And so we even had a fun in one of my videos this week with what Jacob Rees-Mogg said, and that his wording of Brexit. And I don't want to comment on JRM again as much as I don't want to comment on Nigel Farage again, who sees Brexit as a failure. But nevertheless, the British government under Rishi Sunak, if it was a government of the will of Rishi Sunak, he would have made a far more pragmatic approach on Brexit than this government has done now. That they got together the Windsor framework is a real miracle already, because of the right-wingers even in cabinet. But even Starmer is not doing a good job there at the moment. He wants to renegotiate the Brexit treaty, as you know, from a former video. But he really has to tell me what he wants to achieve and how he wants to achieve this. But the British will have to deal with the Brexit consequences for a long time to come. And what Starmer is always saying with the new policy of Labour is make Brexit work. That will never happen. You can't make Brexit work. Brexit is always worse than the alternative of remaining in the EU. It will always be worse, no matter what some trolls here always copy and paste from the old headlines into the comments. It will never work. And I'll see you in my next video. I'll be back.